Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about AMD, which is another high-flying semiconductor stock primarily associated with their graphics chips and is recently moving more and more into the AI space. However, they announced earnings yesterday evening and the stock was pummeled in overnight trading, down more than 7% at some points or $12. However, this is still a very strong start to the year with the stock, despite yesterday's performance, being up about 20% on a year-to-date basis. Again, this is largely to do with the resurgence of tech and, in particular, the semiconductor industry. Now, whenever you see a stock drop that hard, one of the things that I like to look at is the options premiums, particularly on stocks where you may want to own those shares at a certain price given a certain point in time. Now, if you have a large cash account, it can be beneficial to generate premium on those investments by purchasing these stocks. This would be similar to selling a naked call, or if you have shares, you can sell a call, but in this is what would be called a cash secured put. Now, for AMD in particular, the reason I like this when the stock drops super hard, and it's even dropped between now and when we saw earlier this morning, but if you were to sell a put, and in particular, I would like to go a little bit farther out, maybe June of this year, and you can see some of the put premiums associated with what is here on the screen. So the stock is currently trading around $169 a share. However, I have the capability to sell shares at $165, or sell a put at the $165 strike price, at which point in time I would receive, if I were to sell one of them, I would receive $1,515 for that option. So this is the amount, which this is essentially saying that if the stock is under $165 as of 6/21 this calendar year, then I will receive, or I will be forced to purchase 100 shares at $165 a share, which would be $16,500. However, you can see that I would be getting paid as of today $1,515. So if AMD were to go up from here to $170, $200, anything over that $165, I get to keep that $1,515 and I do not have to purchase any shares. However, selling cash secured puts is not without risk, as you can see that even though I will collect that premium, if the stock were to go to zero, I would miss out and have to, or rather I would lose $15,000. However, the expectation here is that the stock would not drop that much, and the way that I lose on this, or that break-even point, is if the stock at expiration is $149.85. However, if this option changes in price at any time between now and the expiration date, I have the capability to buy or sell that option back. So if I said I really like this $1,500, however, the price stays around this $170, $165 mark, but the option drops down to $1,000, I do have the capability to buy it back for $1,000, thus locking in a $500 gain. So there's a lot of different ways you can buy and sell or trade options. I would just note that it is definitely more risk on than what you would see in the stock side of things. That being said, when you see some of these high flyers drop and drop materially, these premiums get juiced, and I think that there is opportunity to generate some cash in an environment where there's a lot of volatility, and selling covered calls and selling cash secured puts is one of the ways to do them. So let me know in the comment section down below your thoughts on cash secured puts, your risk tolerance, and any feedback you have. Thanks for watching. Talk to you later.